Nearshoring represents a really interesting opportunity for both locations but also real estate across EMEA. What's really interesting to understand is that the drivers of nearshoring are perhaps slightly different to the ones that we might necessarily have thought that they were. The big headline is it's not just about cost. Cost, of course, plays an enormous part in business decision making, but so many other factors have now risen up the corporate agenda that are inflecting the choices they make. Part of that is around social responsibility, sustainability, impact, understanding and oversight of what investment means and what manufacturing means in different geographies, but also things like the geopolitical situation informing the choices that businesses now make. Trying to get under the skin of how that's driving the choices made by different sectors is really important because it's not the same for everyone. And that then, of course, informs their choices around location. So which countries that's going to mean for different countries, for different geographies, different sectors, and of course then for all of us what that means to real estate. And for real estate, it's a choice of locations, but also specification, new being most operationally efficient, but also understanding what it means for energy, particularly where it's capital intensive investment. So lots of automation requires lots of energy, but more and more so it needs to be sustainably sourced. And of course, wrapped up in all of this, what it means for the different types of real estate stakeholders, occupiers, developers, and investors, and what that means in terms of opportunity, but also risk, and how working together you may be able to create more opportunity whilst also understanding and mitigating risk. The CEE has represents a really strong opportunity to be able to capture some of the nearshoring phenomenon for a number of different reasons. The costs in the CEE are well understood to be much less in terms of the costs relative to nearby Western, Northern and Southern European neighbours. But we also have the proximity factor. So the ability to be closer means shorter journey times. It also means therefore lower transport costs, but also lower emissions for the transportation of those goods. The flexibility to be able to scale production up and down and also understand what's happening with your investment if it's a major piece of infrastructure that you're putting in a CEE country. Being closer means you have greater level of oversight and control. It also means the geopolitical dimension. There is an awful lot of incentivization to be present in these countries. There is a lot of governmental support, both at a national level, at a local level, but also at an EU level to encourage development, particularly in industries such as high tech and green industries. And we're seeing that in the evolution of EV batteries, as there's been well publicized EV, electric vehicles and batteries and other technologies that support the development of EVs, and also in high tech and things like semiconductors. So we are seeing an awful lot happening, but it's not the same for every sector. It's not the same for every geography. There is also a lot of opportunity around existing locations where there is a clustering effect and a transition into new economic circumstances driven by lots of different factors, including sustainability.